Hello students, today we are again solving one more problem which is also related to ratio analysis. Here we are going to calculate different ratios using P&L account and balance sheet. So this particular problem is having information, the financial information, financial statements which is going to be used for calculation purpose. Here we need to calculate liquid ratio, current ratio, gross profit ratio, operating profit ratio, operating cost ratio, overall profitability ratio, stock turnover ratio and creditors turnover ratio. So this is the balance sheet this is the trading and P&L account, and this is the balance sheet that is going to be used. Okay, so here first again in the same manner as we have done in the previous problem, first we are going to do a rearrangement of income statement, for which first we need to consider sales less cost of goods sold. So you will get gross profit. In that gross profit we need to reduce, or we need to deduct operating expenses. Here office expense, administrative and selling expense, other expenses are reduced. So operating expense is going to be 3,25,000. So operating profit is going to be 9 lakh minus 3,25,000, 5,75,000. So we need to add non-operating incomes, profit on sale of share, and I am reducing non-operating expenses, loss on sale of machinery. So you will get profit before interest and taxes, that is 6,10,000 rupees, less interest on debentures rupees 10,000 rupees. You will get net profit after interest. So here also the tax amount is not given. If tax amount is given, so you need to calculate, you need to deduct that amount, and you will be arriving at net profit after interest and taxes. So next is rearrangement of balance sheet. First we need to calculate the capital and liabilities. Here equity share capital, preference share capital, general reserve and P&L account balance, that is profit, is also given. So total of all these items is going to be 12 lakh rupees. 12 lakh rupees, and to that we need to add long term debts. If there is any debts, we need to add that one also. Here no long term debt. So total capital employed is going to be 12 lakh rupees. And next is asset side. So asset is in the asset side, first one is fixed assets, land and building, plant and machinery, furnitures. So total is 8,50,000. Investment, no investment is there. Then current assets, in that current assets we need to reduce current liability as well. So this current asset is not directly shown in the outer column. Okay, first we need to write the current assets in the inner column and also current liabilities also in the inner column. By reducing the current liability in the current asset, you will arrive at net working capital, that is going to be written in the outer column. Okay, so the cash and debtors is 50,000 plus 2 lakh. Liquid asset is going to be 2,50,000. So for which stock is added 3 lakh. Current asset is going to be 5,50,000. This is current asset, this is quick asset. So by this current asset, in this current asset, so we need to reduce the current liabilities, that is sundry creditors, bills payable. Okay, so 1,50,000. So total liquid asset, liquid liability is going to be 1,50,000. Bank OD is there. Bank OD is not considered in liquid liability or quick liability. Bank OD is 50,000. Total current liability is 2 lakh. Okay, so net working capital is going to be 5,50,000 minus 2 lakh, 3,50,000. So here capital employed 8,50,000 is fixed asset plus net working capital is 3,50,000. Total 12 lakh rupees is capital employed. Now here the first ratio that we are going to calculate is liquid ratio. Liquid ratio is calculated with the help of liquid assets and liquid liability. It is liquid assets divided by liquid liability. 2,50,000 divided by 1,50,000, 1.67 is to 1. So standard liquid ratio, that should be 1 is to 1. Here the 1.67 is to 1 is better than the standard ratio. The second ratio is current ratio. Current ratio is current assets divided by current liability. 5,50,000 divided by 2 lakh is 2.75 is to 1. Again, here also the standard is given in the theory file that you can refer. Standard is 2 is to 1. Here the ratio that what we are going to get is 2.75 is to 1, which is better than the standard given. Okay, which means the liquidity position of the company is good. Then the third one is gross profit ratio. Gross profit ratio is gross profit divided by net sales into 100. 9 lakh divided by 16 lakh. You will get 56.25%. The next ratio is overall profitability ratio. So here operating profit divided by capital employed is considered. Operating profit is 5,75,000 divided by capital employed 12 lakh rupees, which is going to be 47.92%. Okay, then operating profit ratio is operating profit divided by net sales. So if you calculate, it will be 37.92%. and operating cash cost ratio. So as I told you earlier, there are two different formulas that you can use. 1 minus operating profit ratio, 1 minus 35.92%, which is going to be 64.08%, or otherwise if you use the operating cost with net sales, you will also get the same answer, that is 64.08 or 6. Okay, then the next one is credit turnover ratio. Creditors turnover ratio, net credit purchases divided by average creditors. Your net credit purchase is 1 lakh rupees. Average creditors, that is opening creditors and closing creditors. So here opening creditors and closing creditors are not given. So only creditors is given in the problem. That creditor itself is going to be average creditor. So that is in the problem, sundry creditors and bills payables is given 1 lakh and 50,000. So total average creditor is going to be 1 lakh 50,000. Here creditors means you should not only consider sundry creditor, you should also consider bills payable. Okay, so here creditors turnover ratio is 0.67 times. Then stock turnover ratio, cost of goods sold divided by average stock, 7 lakh divided by 1,50,000, you will get 4.67 times. So this particular information, so creditors turnover ratio, debtors turnover ratio or stock turnover ratio is going to tell you that 4.67 times the stock turnover is going to happen in a year. Okay, that means in a year, so the stock which are going to be taken into the business by purchasing or by any other means and sold to the customer. So this particular cycle is going to repeat for 4.67 times. The same way creditors turnover is also going to be 0.67 times in a year. The debtors turnover ratio is also interpreted in the same manner. Okay, for any other information, for any other queries related to ratio analysis, you can contact me or you can comment on this particular video only. Okay, thank you.